Welcome everybody, this is the Astrofx team. Thank you for tuning in on your Tuesday. This is Technical Tuesdays, volume 48.
That's right guys, it's been a couple of weeks and we have had some great market movement recently, and we've also got some of our trade setups to share with everybody. So I've got some freshly analysed pairs, and then we're going to switch it up a little bit by Nat's going to go into some of the main substantial levels and pieces of movement on some of the main currencies, and then I'm going to jump into the all-important technical breakdowns.
That's right, I'm here to update you, and Sean's here to give you the hot picks for the next week ahead. Now, we did take this feedback from the last YouTube video that we did. I think that we put 5 days ago. If you haven't checked that out, make sure you do. Yeah. At the end, we said, guys, we want to hear what you guys want to see. Now, 80% of your feedback was the technicals. Guess what? We're giving you what you want to see. So we do hope you guys enjoy the video, and thank you for watching. So my job right now is to get you up to date with some of the currency pairs that we trade here at Astrofx. What I'll be doing is displaying some of the charts behind me and going from a weekly perspective down to a daily. Hope you guys enjoy it, and let's begin with EURUSD. So right here behind me, we have the EURUSD chart. EURUSD, we're going to go over the past 2 weeks of price action right now. So in the past 2 weeks, we've actually seen it break up plus 300 pips out of this area of consolidation. This area of consolidation, the market was trapped for nearly 16 weeks. So we can see a lot of indecision, candlesticks and price action before this break that we've actually seen right here. Now, from the open and close of this candlestick, which is the last week, this was a 280 pip plus move. The last time the week actually created a 280 pip plus move was nearly 28 weeks ago, which is this action right here, which actually entered the area of consolidation. And let's go down to the targets that we can possibly see EURUSD going to right now. EURUSD, now we step down again to the weekly and just zoomed out. We see the area of 1.1500 being EURUSD's next target. Now this entered this area of 1,000 pip consolidation back in January 1st, 2015. And had 17 attempts to break to this upside, but again has failed to do so. So now we've actually hit from the support of this 1,000 pips, we're aiming back up towards this range. So now let's go down to the daily perspective here on EURUSD. So the daily perspective, we can see the price is currently stalling at the 1.126 level. Now we have two scenarios which we're going to give you, both in which we see the price will continue back up to that 1.1500 level. The first scenario is that we're going to see some retracement. The price could come back down before then continuing that move to that monthly level. And the second scenario is when the next week's price action continues, we can see it charging towards that level straight away. We're going to have to see what happens. Now let's move on to the next currency pair. Up next, let's talk one of my favorite currency pairs, which is USDCAD. So USDCAD, which I can basically describe right now as falling off the face of the earth, we can actually see had a rejection of the 1.37 level. It actually was trapped in an area of consolidation, roughly 100 pips, which we'll see in a minute on a lower time frame. But let's talk about 1.37. Now 1.37, as we can see back here, this is December 2015, February 2016, was a level of resistance before it came an area of support. For us, this is a strong weekly level, which the price has right now been rejected from. Now when it comes to targets, we can see the price will continue to fall to 1.34. 1.34, as we can see, USDCAD loves to sit around ever since, I believe, October 2016, which is roughly back here. So again, always draws back to that 1.34 level. So now let's go into the daily time frame to give a bit of an in-depth look even further. So on the daily hit right here behind me, as we can see, we can really see that area of consolidation that we were talking about, the 1.37 level, a lot further. Now right now, in between 1.37 and 1.34, it's continued a 250 pip decline. If it continues to our expected target, this will be a total of 300 plus pips, which would be fantastic for USDCAD, and then I can only update you further once we've actually achieved that level. So up here behind me we have the Aussie dollar, US dollar, which is one of Sean's favorite currency pairs. And the only way to really describe this on a monthly bias is extremely choppy. And we can see this key level right here has been tested numerous times, and we can see loads of different fake out moves. And what we've drawn on for you right here is pretty much an ascending wedge, showing you the price trapped between this wedge of roughly a 900 pip range. It entered this wedge roughly summer 2015, and ever since then we've actually considered and kept on going sideways for a long period of time. Now, let's look at this low right here of 0.70. Now 0.70, if we were to go back to roughly 2009. And at this same level which the price is affected now, 0.7 back here, as we can see, Aussie dollar, US dollar did not like being at this level, and that's why we can see an extreme bullish climb back up to this major key level here. Now the same key level, 0.86, let's take note of that. Now let's zoom in right now, and all we're going to simply do, which we do right here at Astrofx, is measure this range. So once measuring this range, again 900 pips, I'm going to take that and extend it on what we believe soon will be a bullish break up. We'll again achieve the same price that we did back in 2009 of 0.86. History definitely repeating itself, and that's a short look at Aussie dollar, US dollar. Let's see what happens in the following few weeks. Now, one of the last currency pairs I'm going to go through right now is GBPUSD. That's right, let's go through cable and see what we have going on. So cable right now for the past 4 weeks has actually just been sitting below this key level of 1.3. So for the past 1, 2, 3, 4 weeks, it's just resting its head just below that. But that's actually considered okay, considering since 1.25 we had an accelerated boost, and this candlestick right here was roughly a 450 pip candlestick. So from level to level we see it's going to be a 500 pip total climb. Let's go down to the daily and see what we see. So on the daily perspective on this currency pair, it looks like we're just sitting on our hands, unfortunately. Not really as exciting as the other currency pairs we went through. What we're going to have to see right here is either a rejection of this 1.3 level, which will send us back down, or once we've broken this, we do believe it can maybe go ahead and do another 500 pips to the 1.35 section. But again, we sit on our hands and we analyze what we see.
Yes guys, here are the all important technicals where we're going to go a little bit deeper into the information that Nat clearly presented to everybody just then. I'm going to start with the EURUSD. Now, as you can see on the screen here, Nat did mention that we may see a slight rebound from 1.1260. In the last few minutes, EURUSD has in fact declined around 50 pips. Okay, and as you can see right here, I am expecting this pullback into this Fibonacci region in order for us to look for a potential setup back to the upside. If I go into the daily time frame, as you can see now, over here in the UK, it's 5:30. We have around 4.5 hours until market close. So it'll be interesting to see how this candlestick actually forms. Currently it's a shooting star, and we also have a tweezer top here right on the 1.1260 level. If I zoom out, okay, I can zoom out over here. I'm going to show you exactly how we actually plotted this key level of resistance on. So over here, I've gone for the average of all of these wicks and all of the rejections. As you can see, the price action around September, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, around 10 or 11 bodies, which actually, candle bodies, sorry, which actually could not close above that level. We had another retest on the elections, okay, the US elections, and right now, as you can see, we have a shooting star. And by the end of the day, we'll also see if it's a tweezer top formation. Pullbacks on the euro, a good buy point would be 1.1150. If we do manage to break this pink region right here, we will come down to 1.1080. So EURUSD, we are expecting further upside to the major monthly level, which Nat did in fact go over, 1.1450. However, we're expecting a pullback, maybe even 80 to 100 pips firstly. So that's my bias on the EURUSD, and as you can see guys, you can note these levels down, and you can also note where I've attached my Fibonacci from the lows up to the highs of the resistance. Going on to the USDCAD right now. Now this is a setup I actually went over with a bunch of students yesterday. We're all actually in this trade short. Today, well, we're more or less break even now. We did in fact come around 20-30 pips into profit earlier on, nothing substantial. However, the risk reward on this trade does make a lot of sense to myself, given that if we take it over to the weekly time frame, now just to put it into perspective, as what Nat was talking about with the 1.3700 area, USDCAD for the last, I would even say nearly a year now, has been extremely choppy. However, it has been pulling back, giving us the higher highs, higher low structure, right into the 3700 zone. Now for me, the 3700 is more or less the last resort of this pullback before maybe we can expect a move very, very similar to this move from 2016, the start of 2016, sorry. This move from top to bottom is around 2000 pips. If we can measure from the lows to the highs, Okay, we're looking at about 2,000 pips from 3,700 if we can duplicate this downside move. So a lot of dollar weakness is ahead for me. We're looking at around 1.1500 to the downside. So that's just a rough estimate of taking the previous price action. We've waited through this consolidation range and this pullback for almost a year now. And is USDCAD ready to decline and do what history has showed us as well? So that's on the weekly time frame. Going down to the daily at the moment, the risk reward on the trade actually makes quite a lot of sense. We've got our stops above and beyond the candlestick of last Friday, and it's also above the resistance level there. 1.3400 is the first target. The secondary target is 1.3275. So you can see this here, guys. I've got daily levels, got monthly levels, I've got weekly levels. So USDCAD in a nutshell is bearish. The only thing I would say about this currency pair is that we could see a small pullback to that daily level before actually coming down. We can make another right shoulder, if you will, before declining around 250, 300 pips. So that's that. One more I want to go over is gold, actually, before I get onto my other currency pair, GBPUSD. Now, GBPUSD is something that I'm going to throw in here just because it's relatively new to Technical Tuesdays. So we'll get to that one in a moment. On gold, I can see, if we look at the daily time frame, now again, I went over this yesterday. All the analysis on this chart right here is very, very fresh indeed. Now, we have a series of higher lows. In the Telegram group, I actually posted around 2 weeks ago a gold short trade. It went halfway to the target and actually reversed. I did update that, and I changed the bias on gold at the moment. So I'm going to give you two bias actually, but the bias which holds firmly strong for me is upside. Now, given that we have the higher lows in place, okay, 1 second, let me just duplicate this ellipse here. So we have higher low, higher low, higher low. They're quite discrete, however, they could be the catalyst for a new higher high. The higher high would have to come in above and beyond the prior over here at 12.95. We can also fling a fib onto this setup as well from the lows to highs, this wave A up to B. And we have retested and respected the region. We have three confluences going on here. We have the 12.25 weekly support. We also have a daily area at 12.18, and we also have the fib zone just in between. Oh no, sorry, we've just tested the 78.6. Upside for gold is a 1,300 per ounce. And again, this is a daily piece of analysis. Today we are weak, however, we can maybe test 12.50 before going higher, guys, so just bear that in mind. And alternatively, if we actually form a solid right shoulder, because as you can see as well, 12.63 is also a key area of resistance. So if we could either retest 12.50, bounce to the upside, and go and respect 1,300, maybe even 13.25, because as you can see, the fib target's up there as well, lining up bang on with one of my weekly zones. Or we can decline and into new lows. So it's just something to be aware of. There's no active trades running on this commodity at the moment. This is just purely analysis, so take what you need from that. I'm just going to keep that on the daily time frame to aid any confusion. Now we're going to go over to GBPUSD quickly. GBPUSD, the reason I'm going to just wrap this up with this currency pair is due to I did make some bold calls on this again in Telegram in the last 2 weeks or so. Now, GBPUSD, for those Telegram members, you can see that this area of consolidation, which was respected quite well. Let me just turn this box green. You guys may be able to remember this. So I was stating that as long as we stayed above 1.7360, which is this daily area, which I've taken from the wick high here, as you can see there, we respected that quite well. I was awaiting a break to the upside into new highs. So the structure with the GBPUSD at the moment, if I just show you guys the daily time frame, I'll just take this fib off for a second as well. Daily time frame, I can see a series of higher highs, higher lows, and so on, which tells me there's potential here for one more leg to the upside. So higher high and higher low. We can duplicate this. There's one here as well, going over and up to that level there. Now, if you check out this daily candle, we've actually come into the region of the weekly support, 1.7250, which is major, and it's also a fib. So we have fib A, B, C. Our D extension targets are leading us up to 7750 on GBPUSD. So for me, my bias does still remain long, as I went over in the Telegram group, but we've just popped our head below the support. We've retested the next layer of support, and it's also a fib. I do expect this to pick its pace up very, very soon. Target number 1, we could maybe even take first targets at 7500, 2, 7650, and then ultimately 7750. So that would be the last leg on GBPUSD for me. So I'll keep an eye on the 4-hour close. This is 20 minutes from me doing this video, and I would also take a look at the daily close as well. So that's EURUSD wrapped up alongside NATS information. We've gone over USDCAD as well. Target stop placement there, in which I went over with some students. Gold analysis, two scenarios to the upside and downside, and then GBPUSD, I'm actually holding firm on my bullish bias. So guys, I hope you enjoyed the technicals. Again, take what you need and discard the rest. It's not gospel, so again, please align this with your trade ideas and technical analysis. Thank you.